Well, good afternoon and welcome. Thank you for joining us for today's Business Success Series presented by Manulife. And as today's focus is business after COVID for sale. For sale, what happens now? My name is Ian McLean, and I'm the President and CEO of the Greater Kitchener-Waterloo Chamber of Commerce. Before we get started, I would like to take a moment to acknowledge that we do live and work on the traditional territory of the Neutral, Anishinaabe, and Haudenosaunee peoples, as we seek a renewed relationship based on a foundation of mutual understanding and respect. As participants in today's virtual event, we are coming together as one. We believe everyone is free to be their true self and receive the same respect and opportunity, regardless of age, ethnicity, gender, culture, identity, sexual orientation, beliefs, or language. We hope you will join us in fostering a positive environment here today that is a safe and welcoming space for all. We know there's more that we can do, and we are committed to listening, learning, and growing as we go. Today's session would not be possible without the continued support of our partners and sponsors. So a special thank you today to our title sponsor for the Business Success Series, Manulife, our platinum sponsor of the series, the Immigration Partnership of Waterloo Region, and October's sponsor, Duntroon Law. These organizations are committed to supporting our local economy and providing businesses with the resources and tools they need to thrive. Just before the session starts, I'd like to go over a few quick reminders. Please ensure that your microphone is muted throughout the presentation so we can reduce any background noise. If you have a tech-related question, please comment in the chat section, and a member of our team will get back to you in momentarily. If you have a question for today's speaker, I'll gather those throughout the session, and our speakers will do their best to answer as many questions as possible following the presentation. All attendees will be sent a recording of today's presentation, and it will also be made available on the Greater KW Chamber website. At this time, I'd like to invite Matt Dewar, partner at Duntroon Law, to introduce today's speakers. Matt.
Thank you, Ian. Duntroon is proud to be this month's presenting sponsor of the Business Success Series. I have the distinct privilege of introducing today's guests. We've got Kevin Valentine and Paul Drouillard. Paul is a business advisor based out of the Grant Thornton Waterloo office. Paul takes special interest in providing his clients with timely service and jargon-free business advice on a multitude of issues, ranging from accounting to growth strategies. Paul has vast experience in executive roles within the corporate world and for the past 20 years as a partner in public accounting. Kevin Valentine is based out of the Grant Thornton Waterloo office and is a senior manager specializing in senior financial support and advisory services. Kevin is passionate about helping small and medium-sized businesses improve their cash flow, increase their profits, and prepare them for the sale or transition out of their business. A new service that Kevin is offering is a business growth and transition readiness assessment. Kevin brings more than 3 decades of professional financial experience with many different industries. In addition to being a chartered professional accountant, Kevin is also a certified business exit consultant, a CBEC, where he works with business owners to plan their transition out of their business in the way that best meets their goals. So thank you to all of you for joining us today, and I'm going to pass it back to you, Ian.
Well, thank you so much. I appreciate that. We appreciate your Duntroon and your support of this series. It's so important for many of our members to get the advice and information they need, because even as we're in pandemic, the world goes on, people get older, we move to retirement, all kinds of things happen even though we're in the middle of a pandemic. So very, very much appreciate your support of this program. And I think what I'm going to do, I think if Saba's going to put on both Paul and Kevin on the screen, if I'm not mistaken, I hope, because we're going to get right to the fireside chat. Let me just see there. There we go. Is that what we're? Okay, so there's Kevin and I see Kevin and Paul now. And maybe that's the place to start. I think Kevin's going to he's going to be the workhorse on this in this session. Paul will be the show horse, which means he'll bring the color and the a few anecdotes along the way. But as we get started, Kevin, and I guess the place to start is, yes, we've been through a global pandemic, and that has really, businesses have still had to do their accounting, and their revenues have been down, but they've got government. So there's all kinds of things that they've had to do during the pandemic. One thing that hasn't stopped as a result is time keeps going forward. People get older. People's retirement plans or their life plans continue on. And so as we think about the last 12 months and the experiences that you have with your clients as in the midst of this COVID, what does that look like to you? Because people still need to be saying, hey, look, I'm 60 or 63 or I would just want to sell my business because I want to try something different. Those things happen even though it's a pandemic. What's been your experience with clients over the last 12 months?
Well, I would say that more and more clients, especially the ones that are baby boomers or just before that, are really thinking again about making that plan of selling their business or retiring. They've gone through a number of recessions, and now they've gone through this COVID experience, and they're getting tired, right? They're and seeing more and more issues with running their business and getting the staff that they need, and it's becoming more and more challenging for them to continue on. And they're kind of saying, well, I can't imagine my life without being in my business, so to speak. And now they're starting to think, well, I'm going to have to, right? I can't continue like this, and I'm in my late 50s or early 60s, and got to move on, right? So it is a very strong market for good companies, companies that are attractive to potential buyers. But there's a lot of businesses that aren't saleable in their current condition, and work needs to be done to make them saleable. It's not impossible. Work can be done to do it as long as you're given enough time to do it. But I think that's important for them to realize that and to take steps to improve their business and get it ready for sale.
Okay, well, I'm going to come back to that in a minute, because I think the making your company saleable, because I think that what one of the things in my career in business is, when it's your business or your thing that you're selling, I think we all tend to overinflate what we think it's worth. And so that's one of the risks. But we'll come to that, making the company saleable or best saleable or most valuable, I guess. But let's not leave COVID quite yet. I think it's fair to say that, considering COVID, the economic uncertainty couldn't be higher in a lot of ways. At least on the surface, there's a lot of economic uncertainty, and I would say for small and medium-sized business, that's something that weighs heavily on them. So, what would be some of that first tranche of considerations when someone's saying, hey, it might be the right time, or it was in my mind that at late 50s, early 60s, I'm going to sell my business? But what are some of those considerations they should be looking at now when selling their business, given the fact that we have been in an 18-month pandemic, and we probably have another 6 to go?
What are the things that they should be considering? Is that
what should they be considering?
Well, they should be, look at their business as it stands now, and how have they been affected by COVID and the effect on the economy, and see what, is there a way to pivot your business in such a way that you can either not be seriously affected by it. And some businesses have been successful at doing that. And then also, potential buyers of your business are looking at, what is the future of your business? What is the impact that COVID has had? And is that just a blip, or are we looking at this business in such a way that it can get through this period of time and excel afterwards, right? Because what a buyer is looking for is future. What is the future profitability and cash flow of this business, and how likely is that going to continue into the future?
If I can add one to that as well, Ian. One of the things that we're seeing with some of our clients that we're dealing with is that even though they might be considering selling, the problem that they're facing is the buyer and being able to arrange financing. So throughout this pandemic, a lot of the financial institutions have also become a lot more risk adverse as well. So obtaining funds that you can use for acquisitions, that has shrank a little bit as well. So the owner may be all ready to sell and might even have a buyer identified, but then trying to arrange financing. So now the question is, do I do a vendor take back? Do I stay involved in the business even though I want to get out? So it's leaving a lot of open-ended questions that don't really have an answer for right now.
Yeah, and I think that's where that's important factor to keep in place. So Kevin, I was struck by the comment, and I want to come back to it now. Is you've got a business, you may have a track record of saying, here's what my numbers have been pre-pandemic, and you've seen growth and you've seen numbers, and here's what my net earnings are and gross revenues and all the usual metrics that you would use to crystallize or put a value on what you think your business is worth. I think maybe talk about that. Some of those things may not be operable because you're now into 2 years of having numbers that don't bear, or certainly aren't what they were in the past. And then you're not through it to know whether you're going to bounce back and have those same levels of business. So is that part of the set of issues you got to deal with in order to make your business saleable, or were you talking about different things to make your business more saleable?
Well, there's a number of things that make a business saleable, and they've been around for a long time. It doesn't matter that there's COVID, but a big one is that the business can operate without the owner, and that if you were going to take the owner out of the business and put in a new owner, and that owner may not want to be making it their lifestyle type business, that's a big one to make it such that it is more saleable. There's also putting in processes in place, having controls, looking at the future of the business, and if the business is lacking capital, for instance, that if there was a big injection in capital, could they grow the business significantly, right? So they're looking at the future of that business and how can they increase it.
So if you owned a franchise, let's just pick one, M&M Meats as an example, and you're a hands-on owner, you're in there, you're working, 5-6 days a week, but as getting it ready, that the person that you're thinking of selling it to is saying, I have no interest in being in there. I want to put my capital in. I'll take my return. Would it be right down to brass tacks of saying, okay, Kevin, tell me what I got to do. And you might say, well, you're going to have to hire a good manager or like someone that's going to operate the business so that you don't have to be there. I mean, are those some of the things when you're talking about how do you make it more saleable? So that the prospective new owner can see themselves being owning the business and having it suit their own lifestyle. Is that the sort of thing that you're getting at?
Well, potentially, like there's different types of buyers of businesses, right? There are the type that say, well, I want to buy my job and work in the business 5 days a week or 6 days a week or whatever. But then there are others that look at it as an investment, and they want to grow that investment going forward. And so to be attractive to all different kinds of buyers, because it may be difficult to find the one that is willing to do the work all themselves. It's best to make it so that it is not relying on the owner.
If I can jump in there as well, that just to add to what Kevin's saying, but Ian, you hit it on the head with that. there's two really distinct types of businesses, the franchise and the individual independent owner operator. And what sets a lot of them apart is franchises come with systems, systematization.
Yeah.
Here's the rules, here's what you do to follow it. And it becomes a little easier for somebody to just walk in, open up the manual and carry on. What we're seeing in a lot of businesses is that it's not systematized. So if you wanted to come in and buy this business, now you have to actually learn it all from the ground up, because it's not just a set of, here's the system, here's how it works, here's how the manufacturing flow works, here's what this person does. And that's what we're finding working with Kevin and some of our clients, is that we need to actually spend time, and it could be years, to actually get a decent system in place so that your new buyer, who might not want to be so hands-on, has the system, the business is running on a system, all the staff know exactly how it's supposed to work. So any of the listeners are out there, that's one of the first things we would ask you to look at, is look at your own business and how systematized is it? Is it easy? Is it running like a franchise?
Well, and I guess that you're right. I happen to use the example of M&M's, which is a franchise, which there's a book when you open up, if here's how you order, here's where you order from, et cetera, and how store hours. But if you're an independent retailer or a standalone restaurant, you may not have those systems. You're not likely to have those systems in place. And to get back to Kevin's point, are those the types of things that you'd want to kind of get? And I think I heard you say there, Paul, you may want to take some time before you sell your business to really get those things tucked away and say, we are going to systematize how you operate the business so that you're more ready to sell. Is that maybe the question to both of you? Is that sort of one of those things that you'd want to do to prepare yourself to put your business on the market? So I'll start with Paul, and then we'll get back to Kevin.
Oh, absolutely. A lot of clients, they look at an accounting firm as, we're just going to come here with, a financial, here's the number you're going to shoot for, and here's what you're going to ask for, and we'll help you negotiate. But in reality, what we offer is exactly that. We help you get your whole business together by helping you identify the weak spots. And one of those weak spots actually is, what is the flow? How does things flow here? How do you order? How do you manufacture? How do you sell? So we do identify the system, and we actually have experts within Grant Thornton that can help you actually prepare that as well. Kevin being one of them.
Kevin?
Yeah, well, there's a misconception, I think, that the value of the business is solely based on the profitability of that business, right? But that's only half of the equation. The other half is the risk from a potential buyer's point of view. And what I look at is both, right? How can we increase the profitability of the business, and how can we decrease the risk from a potential buyer's point of view? And decreasing the risk are things like we just talked about, is systemizing the business and making it less reliant on the owner. And the business growth and transition readiness assessment that I do for businesses addresses specifically that, and figures out how can we grow the business and how can we make it so that it is attractive for potential buyers.
Well, maybe, and then I've got some more detailed questions, but maybe let's start with that. I mean, you have a checklist of, so maybe just walk through, not in detail, but say, here would be some of the questions that you can expect Kevin to ask you as you say, hey, I want to sell my business, which is the easy statement to make. You've already drilled down on saying, what does it actually mean? What type of business do you have? You've got operability issues. You just talked about profitability and risk, but what would be the if you said, someone said, Kevin, I want to sell my business. You said, well, okay, here, give me 2 or 3 minutes and I'll tell you the things that you need to consider before we put it on the market. What would that look like?
Well, the questionnaire actually goes through 18 different drivers of the business, right? So we're looking at an overall understanding of the business, the HR factors that you have in place, finance, and then understanding the market that you're in. Is there barriers to entry? Do you have a dominant market share, or are you working towards that? The senior management in place, are they heavily involved in the business? Do employees understand what your goals and objectives are, and are they working towards it?
Yeah.
It's a long list. So,
No, but I think that's important, right? Because I think we all fall into the in this day and age, we say, "Oh, geez, I want to do such and such," and you expect to be able to snap your fingers to do it. But it sounds like, as you start to think about it, the first time you think about it is probably the right time to call Paul or Kevin and say, I better figure out what all the questions are that I need to be asked and to be prepared. So let's go back to which is a follow on to that, I guess. And Paul, you can jump in as well as you see fit here. But so the one part that you've mentioned is that many owners now, I think at all points, but certainly now, for the reasons you outlined, saying they maybe just they're done as a result of COVID. They want to kind of get out. They want to enjoy life. They're taking a step back. So they're considering retiring or selling their business. So maybe, what are the factors that they should be considering when the owner makes that decision? I think you touched on some of this, but not only in the business side, but I assume that there's an aspect of what's the person, selling your business. If you've built the business there's some emotion connected with that as well. So, but we'll walk through what if you're retiring and selling your business, what are the factors that you should consider?
I'd like to jump on that one right now, because I had a meeting actually with clients this morning that we were discussing exactly that. And it's been a business been handed down from the parents to the children, and the children now are thinking of maybe selling this business. It's the difficulty that we have with this one is that it's the parent who has built up the relationship with the supplier, so that if the children want to sell this business, the supplier may not be willing to supply the new owner because it's a relationship business. So this is a total non-financial strategy that we have to now deal with, and we have to have, how do we work around that? How do we actually get supply so that we can actually make this company saleable? Because it's more than just financial, and you've hit it on the head. It's emotional as well. You've built this business from scratch. It's your baby. You have nothing else that you do other than work. So now when you sell this, and you're maybe only in your 60s, which is still young nowadays, what are you going to do? Yeah. What else do you have that's on your plate? So there's a lot of other issues other than financial. There's tax issues, which we haven't even touched on, but that's a whole different discussion, because there's a 2-year window if you want to restructure your business through a trust, so you can take advantage of capital gains exemptions. And so a lot of owners will be ready to sell tomorrow, but now you tell them you got to wait 2 years to make it a taxable, positive event. So this is where getting us involved at the early stages is very important.
Kevin, build on that. I think that's one of those things that, and I think, Paul, you described it as the non-financial, the non-math parts of, selling your business. If a big part of that is relationships, or your access to markets, or your ability to understand your customers, that's not dollars and cents, and it's not math. It's that relationship. I mean, that's got to be. How do you kind of ask those questions to make sure people actually understand to your point earlier, what your risk is, right? Do you really know what your risk is as you sell it to your own business if you're no longer the central person on it?
Yeah, I have a number of questions to ask, even when it comes to the emotional or mental readiness for an exit. And a lot of them relate to things like, do you know what you're going to do afterwards? And do you have a plan? Because it's something, it's one thing to be retiring from something, and it's another thing to be retired to something, right? And the difference is massive. And if you're just retiring from, then I talk to a lot of people that have retired, and there's a 1 or 2 year honeymoon period where this is great, and then they're bored. They're bored out of their skull, right? And they just want to get back into a business or do something again. So but if you've got a plan on what you're going to do, and make sure it's a reasonable plan, it's not just spending time with your grandkids and then your grandkids get older and they don't want to be with grandpa or grandma anymore. So, but also it comes down to other questions related to the business, in that, when you exit, what are some of the goals that you want to achieve? Do you want to make sure the name of the business continues without you, or do you want the management team or the employees looked after? That the new buyer doesn't fire half of them, or whatever the case may be, right? All of these things need to be considered so that you're not unhappy afterwards. There's actually some statistics that are interesting. Only 30 to 40% of listed businesses sell, so that goes back to the saleability of the business. But then only 75% of businesses that have been sold, 75% of them aren't happy after the sale, right? So they haven't planned properly what they need to do during the planning of the exit.
Yeah, and I think that's important factor for our members and people watching that have a business and are getting to that stage, is doing your homework, that you pick the right partner, that you maximize the value, and that you're going to be happy with or satisfied, maybe a better way to describe it, with the conditions once you've done it. Very important. Listen, let's move on, and this maybe falls into that make it more saleable part. But and I guess maybe I don't understand the level of detail that you do, but I would assume that one of the big issues, and again, because of COVID, cash flows and your top line revenue are likely to be, or in many cases, depending on your sector, are going to be lower. So what would be some of the things that a business can do to increase their cash flow? And ultimately, that's one of the factors, right? Whether it's multiples of top line revenue or net revenue, et cetera. But I mean, increasing your cash flow is one of those things that will certainly affect the selling price. What can people or businesses do to try and maximize that, and therefore maximize or increase the value of their business?
Well, I actually have a list of like 100 items that can be done to increase cash flow in the business. So a good thing to consider here is a lot of business owners don't even look at the balance sheet, right? Some of them are just looking at their bank account, and then there are some that are looking at their income statement. But the balance sheet is very important when it comes to the future health of the business, and even the current health, and being able to get financing and being attractive to potential buyers. But one of the factors I use is what's called a cash conversion cycle. And without getting into a lot of detail, it's basically taking how many days of receivables and the days of inventory you have on your balance sheet minus how fast you're paying your payables. And that comes to a number. And for a lot of small businesses, it tends to be 75 days or so. But larger companies really focus on that, and they figure out how they can change their business model so that they can lower that cash conversion cycle. And some of them have even gotten it to a negative number. Companies like Amazon or Dell Computer, where Dell Computer really changed their whole model. Quite often what businesses do is they buy goods, they pay for them, then they sell them, and then they collect the money, right? But if you can change that model so that you sell the item, you buy the products to make it, collect it, and then ultimately pay the vendor for those goods, then you've changed the cycle completely, and you've helped to increase your cash flow in your business. And of course, then there's profitability of the business. I think you were going to mention a few things there, Paul.
Yeah. So one thing that we found that a lot of clients don't really have a true understanding of is what is the profit by product? What is the profit per square foot? What is the profit margin we're making on individual transactions? And that's crucial because you could have, let's just take a company who's got simplistic 10 products that they're selling. You should know what kind of margin you're getting on those products so that you can maybe start focusing on selling more of the high margin products, put your marketing efforts towards selling those products, which then increases your bottom line. But unfortunately, a lot of business owners, especially over the last 2 years, have been so busy. All you're worried about is getting stuff out the door, not really questioning what is the best thing to be getting out the door. So one thing we did always in the corporate world, and we do for a lot of our clients, is trying to get them to start looking at their business and saying, okay, break it down into an individual transaction cost. If you're a retailer, what's your profit per square foot? What's your transaction history? What is your product mix? What is selling? Getting back to Kevin's point, how fast am I selling these things versus how fast am I paying for them? Because if you have a retail store and you're looking at, having something sitting on the shelf for 120 days, but you've already paid for it 30 days, that's affecting your cash flow. So there's a lot of factors that a lot of companies aren't taking into consideration that way.
I see it with companies that are project-based as well, too, where they're not tracking the profitability of their projects.
Mm-hmm.
And they really need to do that so that they can make sure their pricing is correct, that they learn lessons from those projects, and so future projects are more profitable.
So one of the things, and I think I asked this before, but I'm interested in both your takes on this, and because it would be, I in some ways ephemeral. I mean, many businesses, in fact, I would say the vast majority of businesses have taken on additional debt that would be extraordinary debt as a result of COVID, whether it's the SEBA program, bank loan program for small and medium-sized business, but there'll be other mechanisms that just about every business will have taken advantage of in the COVID period. Is that something to account for differently? I mean, a debt is debt, but some are, but I guess to some extent, different types of debt are different in how to account for them or how to position them. And Paul, does that question make sense? I'm just interested because I know a lot of businesses saying, yeah, I had that, I could manage it, but now I've got this SEBA loan and I got this other stuff, and now I got another 100,000. Am I going to be able to cash flow at all when we're past this? And I guess
Yeah.
Is that a separate question?
No, it's a very valid question. It's a question that's always been asked, even during non-pandemic years, because there's good debt and there's bad debt. Bad debt is debt that is just used to take care of your day-to-day operations. Because unless you actually improve your profits, it's going to be very hard to pay that debt off. Good debt is when you're borrowing for, asset purchases,
Mm-hmm.
something they can use to produce better, faster, quicker, different products, whatever. So when you look at a company that's taking on more and more debt just to fund working capital, then unless you start seeing an uptake in the business, then that's going to become very hard to, satisfy that debt. And like we kind of talked about earlier, with the financial institutions becoming, more risk adverse, they're being tougher on their, demand loans and how fast can you repay it, and, reporting. From an accounting point of view, if you have a notice to reader set of statements and you start borrowing too much debt, and now they bump you into a review engagement, well, now your accounting costs have gone up as well. So it has a trickle down effect when you look at debt. We get a lot of requests for lease versus buy. Should I buy this product? But if you buy this product, now you incur more debt. Should I lease it? Well, these are things that we discuss on a regular basis every day.
And I think it's important too that businesses forecast out their cash needs. I see a lot of small businesses that don't do any forecasting at all. And I think it's wise to be forecasting out 2-3 years to see, what are their cash needs going to be, and are they working towards a healthier balance sheet going forward? So.
Okay, want to move on. I think, and this would be relevant certainly for family-owned businesses, that the government introduced Bill C-208 that now allows family members to buy the company from parents or grandparents, but within the family, and qualify for the lifetime capital gains exemption, which can be serious bucks. Do you want to try and take a crack at breaking this down and explain what it means for folks that may be looking to exit their business? I mean, I assume this is it was a big piece of legislation. It looks like it's a big deal. How should people view that? I don't know who wants to go first. Maybe
I'll take a crack at this because this is something that we've been lobbying for years through our local MPs, and unfortunately it's fallen on deaf ears. And this was a private member's bill that finally made it through legislation. It's been a real disservice for years that if you, in the past, wanted to sell your business. So if I had a business and I wanted to sell it to you, Ian, and I wanted to sell you the shares of my business, and it was a qualified small business and all those wonderful things, I would qualify for the lifetime capital gains exemption, which currently is $890 some odd thousand. If I wanted to sell that exact same business to my son, I couldn't take advantage of that lifetime capital gains exemption because it went to a family member.
Yeah.
I know, totally ridiculous. And it was years and years and years like this. So it's finally made it through passing. And I believe the Ministry of Finance has until November to fine tune this actual legislation. But it allows parents and grandparents to sell their business to their children and take advantage of lifetime capital gains exemption. So if you look at that and you say, okay, if spouses, husband or wife, own this business 50-50, and they sold it to their children, each shareholder qualifies for the $890,000 lifetime capital gains exemption. So that $2 million sale, if that's what it was, virtually the entire sale will be tax-free income to the parents, whereas before it was a deemed dividend and it was income to the parents. So this is long overdue, and all family businesses should be applauding, which is why, you know, we are starting to see a lot more uptake with our family business owners considering selling, because now there's a real huge tax advantage to this.
And I mean, in our part of the world here, I don't know whether your specific clients, but there's a lot of farming and family-owned farms, which this has been a big issue for in the agricultural community, because it's very capital intensive, and you've got a lot of your working capital tied up in your fields, not only your fields but in your equipment. And then when you're selling or transferring that to so that's an interesting part, because I mean there's intergenerational business transfers have, as you rightly point out, have been a real sticking point for a long time. Mm-hmm. Anything there, Kevin, that to sort of build on the Bill 208 and how that affects other types of businesses?
Well, I think it's important to note that there is a possible change in this legislation, even though it's just been come out. So it's important to talk to your CPA, accounting professional, or one of us about it before November 1st, because that can change the legislation as soon as that. So,
okay.
Yeah.
Okay. Now we got a few minutes left, and I've got a couple more questions. I wanted to you mentioned him before, and I wanted to kind of give you the opportunity to explain what an exit planning specialist that you've got that designation. What does that mean, and sort of walk us through what that specialty provides to a client?
Sure. There is a misconception, I think, amongst many, where that when you're planning the exit of your business, all you need to do is tax planning and maybe some restructuring. But there is so much more that needs to be done. And an exit plan gives deep understanding of what the goals of the owners are trying to achieve, and anything that relates to their families. Then it quantifies what the resources are of both the business and the owners, and sees what their needs are going forward. So, and that way we're measuring, is there a financial readiness and is there a emotional readiness for that exit? So we're looking at, what are your goals into retirement and what are your needs going forward, and do your current savings meet that? And if not, does the business have a value that would meet that? And if not, do we increase the value of the business and work towards it that way? And then
Kevin is
there's
actually being modest. Kevin's got a certification that very, very few people in Canada have. Tell him what it is, Kevin.
okay, it's a certified business exit consultant. There's actually 3 organizations in the United States that provide designations somewhat related to this. I looked at all 3 and tried to decide which one I would go for, and the one I went for is based out of Boston, and I realized that they're more comprehensive. There was a lot more work in order to get the designation, and it wasn't just doing the studies. I had to actually do an exit plan. They reviewed it, see if it was acceptable within their eyes, and then I got the designation. So it's very important to go through the process of planning the exit and not just say, oh, I want to exit next year or next 6 months, and chances are you won't be happy afterwards otherwise.
Well, I think as we say, our home is probably the biggest investment most people will have if you own a home, and closely followed by a business if you own it is likely to be your next big asset. So making sure that you're maximizing, asking those questions, and getting the expertise that Kevin and others like Paul would be important. Just maybe I want to kind of do a bit of a rapid fire, and Paul or Kevin can fill in. And I guess I hear you. It sounds like there's a lot more planning that needs to go into place than I think people would probably imagine. Aside from cash flow and financial statements, and I'm ready to sell my business. I've heard a lot more of, boy, there's a lot more things that need to be boxes that need to be ticked. Going through your exit planning specialty, Kevin, you're asking a lot of those questions. So here's the question I would ask, because people are starting, and for all the reasons that both Paul, you and Kevin, you have said, is people are taking stock. They may want to slow down. They're coming out of the pandemic. They want to, take advantage of reconnecting with their family. So they want to sell their business. But that's the reason that you start the process. What kind of, when it really boils down to it, what kind of window of time, unless it's a forced sale for some particular reason, but if you want to do your homework, do it right, maximize your, to the greatest extent you can, the value of your asset. What kind of time frame are we looking at here? Like, what would you recommend if you said to someone, hey, I just want to give you a sense, it's going to be X months or X years, that if you really want to maximize it, we can do it quicker. Maybe I'll start with you, Paul, and then come back to you, Kevin. What do you think? What would you say to that person who comes in and says, ready to sell my business? What's the time frame you're going to tell them about? Paul?
That's a small question with a lot of answers behind it. It really depends on the situation. We'll give you a prime example. Kevin and myself are working with one of our clients right now. They approached us about a month or so ago that they are now serious about selling their business. But for them, it makes sense for them to sell their business with a trust owning the business as opposed to them individually. Well, so we have at least a minimum 2-year window now to do a reorg, set up that trust. So the trust now becomes the selling agent for the business. So for them, it's a 2-year window. For others, it could be as short as 1 year if they have good systems in place, if they have given it some additional thought. For others, you're looking at, I would say on average, and Kevin, you can correct me if I'm wrong, but you're looking at a good 2 to 5 year window to do it properly.
Yeah. Kevin?
Yeah, no, I totally agree that it takes that much time, especially if you're trying to increase the value of the business, because the changes that you make have to then be reflected on the future financial statements that are produced, right? And so that takes a year or two to actually start seeing those better results on your financials.
Well, I think on our radio show, Greg and I do every week, we often have Cowan, who helps us, one of our main sponsors. And it sounds to me like we always say, whether it's Cowan or whoever your insurance or financial advisor is, having a constant conversation with your experts so they understand where you are at in your life cycle and what your changes are in your business and where you want to go is really important. And that's what I hear you saying is, if you're saying, best case scenario, a couple of years, or it could be as much as 5, depending on what you're doing. That involves, the best time to plant the tree if you want it to grow as yesterday. If it wasn't yesterday, then it's today, right? Like you do it as quickly as you can. Is that the sense of, having folks start this conversation sooner than they actually think that they're actually ready to retire? Kevin, I mean, is that part of that, again, that exit planning status that you have, asking people to really drill down on when they see themselves physically and really exiting the business?
Yeah, definitely. Part of doing an exit plan is also looking at contingency planning. So it's fine when things go according to plan, but quite often things don't go according to plan, right? And maybe the owner has to be away from the business for an extended period of time, or I've seen where they get a scare, right? There's a health scare, or there's somebody they know got a health scare, and all of a sudden their clock goes much sooner, right? So if the sooner you plan it, the better. And I find too that if business owners look at their business as an investment, and they start doing that very early on in growing their business, their whole outlook on their business changes, and they can have much better results on what is produced from their business. And going through exit planning or just working through a growth process that we have for helping you to grow your business is doing exactly that, looking at your business as an investment and growing it in value.
Anything, Paul?
Yeah, just to add to that, and Kevin's absolutely right, because it's not always when you're ready to sell, it's when you are forced to sell through events that are beyond your control. So what we try to do, especially with excuse me, some of our clients who are becoming more mature in age, is to get them to open up their eyes and saying, this might not be a plan that you have in place. It might be a plan that's forced upon you, because, if you get hit by a bus tomorrow, what's going to happen? Mm-hmm. Is your company able to handle that? Can you transition it to a buyer to the next, level? The other issue that we deal with, and I'm going to put a little bit of a plug in here, is that sometimes clients look at that just saying, oh yeah, but you guys are going to cost a lot of money, and I don't want to spend that money right now because I'm years out, so I'm going to wait. Well, a simple thing like us telling you to convert to a trust, and you've just now got $1.9 million tax-free versus our bill. Yeah. So that's one thing I want to say to the clients out there, the prospective clients out there, is like, I know advisors cost, but the return you're going to get is, worth it.
All right, listen, one more question, and we'll do this sort of as a wrap-up question. And I'll phrase it this way. We'll start with Kevin and end with Paul. What are the in short order, in a minute or less, what are the top three things that you would say to anyone watching today or watches this? Many people will watch this on social media, on the links and after the fact. If you're a business owner and you're, either thinking of selling or getting towards a time when you want to do it, what are the first three things they should do?
Well, talk to a professional about planning for their business, definitely. figure out what their goals are going forward, and make sure that what you're working towards is always keeping those goals in mind, instead of having tasks that may not may be worked on in isolation of what that goal is. Right? And look at your business as an investment and grow that investment.
Okay, Paul.
I'm just going to kind of narrow it down. Michael Gerber, who wrote the E-Myth Revisited, he said it the best, actually. He said, whenever you start a business, your ultimate goal should be to sell that business. So if you always keep that in mind, that my business is being built to sell, like Kevin said, it becomes an investment philosophy, investment mentality, as opposed to a job. I'm creating a job for myself. So when you have that thought process in place and you start dealing with your business more as an investment with a means to an end, then you can start looking at, is it systematized properly? Do I have the right advisors in place?
Mhm.
Do I have a potential exit strategy in place? Who am I selling this to? Am I selling it to an unknown, or am I selling it to my competition, or am I selling it to my kids? So these are all the things that you should be sitting down and thinking about it on a regular, recurring basis.
Yeah. Listen, great advice and great discussion today. Thank you, both Kevin and Paul, for joining us today. That does bring us to the end of today's session. I want to thank once again our sponsors and partners, to title sponsor of the series, Manulife, our platinum sponsor for the series, the Immigration Partnership of Waterloo Region, and a September sponsor, Duntroon Law. And to today's speakers, once again, Kevin and Paul, appreciate your time. And finally, to all of you for joining us today. As a reminder, we do host a new Business Success Series session every Wednesday at 1 p.m. Next week, we'll be joined by CEO of the Waterloo Economic Development Corporation, Tony Lamantia, and Carol Lehman, the CEO of Exonify, to discuss the importance of establishing a formal board of directors or advisory board and how it sets your business up for success while minimizing risks to your small business. We hope to see you then. For full details and to register, visit greaterkwchamber.com. Please do share this series with your friends and colleagues, and join us every Wednesday afternoon for another edition of the Greater KW Chamber's Business Success Series. Because if it's Wednesday, it's the Business Success Series. Thanks so much, everyone. Have a great afternoon. Great
Thanks,
job,
everybody.
guys.
Bye now.
Bye.